Hello, I'm Gwen Preston of Resource Maven, and we're here at the September edition of the Metals Investor Forum. I'm backstage right now with Dawson Brisco of Morien Resources. Thanks for being here. It's been a little while.
Thanks for having me. Yeah, I think it's been about 3 years.
And it isn't because I started disliking Morien. There was this thing that happened. So do you want to just run through the backstory of the last few years for Morien?
Yeah, sure. In the onset of COVID, the mine upon which we have a very substantial royalty was placed on care and maintenance. Fast forward about 2.5 years to just about 2 months ago, the operator of that mine had made the decision to restart it. And over the past 2 months, we've been learning more and more about that process. It's just purely engineering based. It's already permitted. They're just changing the mine plan, and we feel like we're a couple weeks maybe away from a decision, which we think will go in our favor, and we'll see that re-rating event that originally introduced us to you and brought us here.
Absolutely. Okay, so the Donkin mine is in Nova Scotia. It's a coal mine. It's what we call swing coal. So we had always thought of it as a metallurgical coal mine, but actually it's got very good thermal properties. So, and that works out well because we have this crazy coal market right now.
Yeah.
These are big questions that I'm asking you to
No, I mean, it's
down.
exceptionally rare to find yourself in a situation where thermal coal is actually pricing higher than steel coal.
It's crazy.
It had never happened before until about, I think it was 3 weeks after Russia invaded Ukraine for the obvious reason that it put a big strain on natural gas prices, and ultimately, thermal coal exports from Russia into Europe have been banned. And so we've seen thermal coal hang out north of steel coal since then. And to put that into actual numbers, metallurgical coal is trading for $220 US a ton, and thermal coal is still around $380 US a ton. And Donkin, when it was put on care and maintenance, thermal coal was $37 US a ton.
Right. These are the price for thermal coal right now is insane. And again, I don't have a crystal ball, but there will be sustained price pressure on, positive price pressure on thermal coal for a while now, because we're in an energy crisis and there's no quick answer to that.
Sure, and we were in the energy crisis before Ukraine was invaded. Oil was surpassing $100 a barrel back in September of 2021.
Yeah.
Europe was already experiencing an energy crunch. It was already looking at an industrial recession outcome before Ukraine was invaded, and that just exacerbated the whole situation. Natural gas prices are through the roof. I think you showed a chart today of French power prices being up close to 400 times. You're seeing that play out in Germany as well. So if they have a cold winter, it's going to go from bad to worse. Yeah. But it's certainly benefiting coal markets. Anyone associated with energy, for that matter, their equities are surging.
So Klein, the owners of the Donkin mine, they had suspended it. They put focus on another mine for a while. That mine's now doing its thing, which is great. In the meantime, there were other things that worked out that benefit the Donkin mine in terms of the port and the road and things like that, which is fantastic. Now they're on the cusp of, we are fairly sure, getting this restart permit. What does that look like, as far as you understand it, for what the mine will do over the next 6 months, 12 months? You don't go straight into production. They weren't quite there yet.
Right. That's right. When they stopped production, they were at a run rate of around 1 to 1.5 million tons a year.
Because they were still getting to the point where they could get to full production, right?
Yeah, without getting too technical, it's the difference between advanced mining and retreat mining. When you're building out a new coal mine, an underground mine, you're in the advanced mining stage.
Right.
And that could take any number of years to complete, and they were still in that phase. They'll still be in that phase when they restart production. But if they restart production at the similar rate that they were at when they stopped, then our royalty at these prices will generate a larger quarterly royalty payment than we received in over 3 years of it being in production prior to that. So
because of coal prices.
Because of coal prices. And so we don't have visibility on their production guidance just yet, but we'd hope to get that once it's back in production.
So we were chatting about this before. If they go back to the rate that they were advanced mining at before in this development phase, that brings, and we use a conservative coal price, I don't know, $200, $250 a ton. That still brings in a royalty to Morien in the development phase that's in the ballpark of $10 million a year?
Yeah, that's right. 10 million or so after tax, right?
After tax. And of
so
course,
that puts you in a position to be sending out a pretty large dividend as well.
Especially because Morien's focus is to dividend out 80% of its free cash flow.
Yeah, we've always talked about our dividend model as being paid out as a high percentage of our free cash flow, and where that lands, whether it's 70, 80, or 90, is to be determined by the board ultimately. But we have always made it clear that we are a dividend story that's levered to this asset. now that it's coming back online with coal prices being where they are, I think it's a pretty interesting proposition for investors.
And so then in terms of the proposition, the share price has already moved. But I'm not the only one who was aware that Klein was getting ready to restart this mine, or was hoping to. So let's talk about how we can value the opportunity in Morien at the share price that it is. It's already doubled relative to this $10 million a year cash flow. Let's talk about that a bit.
Yeah, so if we're receiving $12 million a year in royalties, and that translates to say $7 or $8 million in after-tax profit, or that's generating $6 million in free cash flow in that range, then on a share price that's trading at 60 cents, that's a 10% yield. And so that's attractive, and we're only talking about the ramp-up phase, right? We're not talking about it being at peak production, and we're not talking about it being at current spot market pricing.
This is true. And there's another potential for upside, which is the mine being larger scale than the initial mine plan envisioned, because it all depends on Klein's decisions there. We don't have visibility on that, but your royalty also benefits from larger scales of production.
It does. Our royalty is 2% on everything under 2 million tons and 4% on everything over 2 million tons. We've never been in that 2 million plus threshold before, but that's the real whip on the royalty, is when we get into that 4% range, and then we start really making good profits on the royalty.
Absolutely. Okay, so in the near term, there's a likelihood of this permit being issued, and there's a good likelihood of that having some positive share price impact, because the mine's going again.
Yeah.
Then there's this nice dividend yield, at least through where we'll understand the numbers better, when they come out with reports and actual statements. And then this is a long life asset for coal, which whether you're talking thermal or metallurgical, I mean, this is a long life asset. Yeah,
it's a 25-year reserve that they have tapped into. We've only scratched the surface of it, so it could theoretically go for a number of years, at least 2 decades, we think. And so there's a lot of royalty money to be had from Morien. And if thermal markets pivot and we go back into sort of a natural gas focused or energy transition focused environment, then the mine will pivot back into a steel making mine. Most of the coal that was exported from Dawson when it was in production was a steel making coal. So it can wear both hats, fortunately.
And then we chatted about this earlier as well a bit. Exits or what might happen to Morien. It might just remain as a going concern, paying out nice dividends from royalty free cash flow from the Dawson mine. What do you think it's hard to say, but Cameron or Klein could also buy you, because it starts to get fairly expensive for them to pay out this royalty.
For sure. If they don't buy us and we remain a pure play on Dawson, much like Labrador Iron Ore Royalty is a pure play on their iron ore asset, that's fine. Klein could theoretically make an offer to purchase us should they have visibility on substantially increasing production without us knowing that. I mean, that's a simple calculation for them to do, and we certainly wouldn't get in the way of that acquisition. But we also have growth plans as well. We have visibility on some niche parts of the sector that no one else is looking at that we would look to explore. But all of this is, 2-3 years down the road.
Right. First, get Dawson going again, get money coming in the door, and start handing it out to shareholders.
Get the royalty running again, reinstate the dividend program, do a little bit more marketing, perhaps re-engage the normal course issuer bid if we're wanting to be that aggressive with it. But there's a lot to do over the next, half year.
Fantastic. Well, thanks for bringing us up to speed.
Thank you.
It's exciting that things are happening again, and I hope that we get the news that we're looking forward to in the next few weeks.
Thanks, Gwen. Appreciate it.